So this presentation then today is about Weststeel's lessons learned as it has evolved into a global agricultural infrastructure, providing now business on 5 different continents. So with that, let me, and Colin indicated to me during lunch that this is the first time he's actually had a chance to speak about Weststeel in Winnipeg. And what better occasion than to do it with all of you in the room over here. So a warm, friendly Manitoba welcome, please, to Colin Osborne.
Thank you very much, Ron, and good afternoon, everybody. I do still raise money occasionally. I have about a 5% fee for that, if you're interested. I do want to just spend a minute. I know I have a short window of time, but I just want to spend a minute to thank Centralia because for 2 reasons. One is this is really a very impressive collection of international business leadership, and so to have the honor to stand up here to address you is my pleasure, and I thank them for that. And as Ron mentioned, you know, I travel across the country and in the U.S. and Europe telling the VicWest story because we are a public company and I have to raise money, which Andre spends freely. But it's ironic that I can't think of any time that I've had a chance to be in Winnipeg and address a crowd like this and talk about the Weststeel story. It's a story that we're very, very proud of, and I think it's a great Canadian manufacturing story. So I have promised, or I won't be invited back, to have you out of here by between 1:15 and 20 after, so I will dive into the presentation. I'm going to sort of break it into 4 pieces. I'm going to give you a very brief overview. Ron touched on some of it on what VicWest Inc. is and one of our operating divisions, which is Weststeel, and what they do. I'm going to talk a little bit about why go global. That may seem like a bit of a silly question, but the truth is a lot of companies go bankrupt trying to go global, and a lot of companies bet the farm going global and don't succeed, no pun intended. In our case, we had other options to expand our business, either domestically or in the U.S., and we made a conscious decision to take our business overseas. And we're in the early stages of that, though I think we're being fairly successful. I'll talk briefly about where we are now, where we sell. As Ron mentioned, we're now in over 30 countries, and ironically, I think there's representation here in just over 30 countries. And lastly, lessons learned. And I call it lessons learned, but I think the truth of it is you know, we've made mistakes, certainly in the last 5 years, where we've intensively tried to grow our business. We've had some setbacks, and we've learned from that. And at the same time, we've had some big successes, and we've learned from that. And we've tried to, I would say, boil it down to kind of 5 points that kind of govern our global expansion. So VicWest Inc., public company, it's a small cap. It trades on the Toronto Stock Exchange. It would be a micro cap if it was in the US, with about a $200 million market cap in total. For those of you that like cash, we do pay a 5.5% yield, so feel free to buy the stock after you leave here today. From an operational perspective, as Ron said, 2011 was just over $400 million. We're approaching the $450 million revenue mark. Most of our growth today is US and overseas. We're just opening our 18th manufacturing plant. In fact, it'll be next month in Little Rock, Arkansas. A little over 1,200 employees, and we have a growing and diverse customer base and a growing and diverse global partnership base, which is key to our long-term future. Again, so VicWest Inc., the nomenclature is a little confusing, but VicWest Inc. is the holding company. The core management team works with 2 operating divisions, one of which is VicWest Building Products, also a 100-year-old company and a Canadian icon in the construction materials space. It's a company that basically fabricates metal components for building exteriors. We like to say solutions for the building envelope. It's about $275 million, so it's the larger of the 2 businesses on a revenue basis. On a profitability basis, Weststeel is by far the better business today. And as you can see, it's about $150 million, and it has 5 plants operating, all in Canada. The main manufacturing base is in Winnipeg still, and will always be. And the other 4 plants are in Saskatchewan and Alberta through Western Canada. From a product perspective, Weststeel has evolved. It made everything from metal ceiling tiles to fuel tanks for jet fighters to all kinds of products. Today, and as you can see on the top of the screen, its main product lines are oil and gas fuel tanks, water storage, though it's not shown there, but water storage all the way up to frac ponds for the oil and gas industry, but its main product line is still grain storage and handling equipment, mainly in Canada and the US, and now growing overseas. Westeel opened, in fact, in 1905, so it's 107 years old, which in Canadian manufacturing terms is a pretty old business. To put that on a timeline perspective, it's also when Einstein published the theory of relativity and dimples were put on golf balls, which doesn't help me a lot, but I guess it was a breakthrough at the time. So we are in our 107th year, and I was having a discussion with Ron about his assemble of grain bins, and I think, by the way, I think he actually did it wrong based on what he told me, but you know, we've been selling grain storage in Canada for decades, and for those of you that have had the pleasure of driving across the Canadian prairies, you'll see sites like this all over the place. We sell about 8,000 grain silos a year. The majority of them end up in Western Canada, and we've been doing that for decades. So, you know, whether it's Westeel, Roscoe, which was a company we merged with, you'll see this site all across Canada. Of course, the business has migrated. It's, as every business, it's become bigger. Everybody wants bigger. Everyone wants more complicated. So the systems we sell today run the range from small on-farm storage right up to fairly complex systems like this. This is, in fact, a biofuel plant in Saskatchewan, and it's the largest grain storage system that we sell. It's just over 30 meters or about 106 feet wide. You can get a sense of the scale if you look at the pickup truck. So our business has become more complicated. The structures require a lot more engineering. These things are erected according to building code. And this is in fact the product that we have taken to global markets and try to establish our position and our brand. And to put that in perspective, Westeel today, even as small as it is probably either the 4th or 5th largest at this in the world. So I mentioned why go global. I actually think more companies should ask this question than they do because it is a very dangerous and difficult thing. You know, we had a 100-year history where I would say 90+% of our revenue was Western Canada. It's a great business. We have developed our business up to about 60% market share. And of course, to the south of us, we have still what is the biggest agricultural market in the world in terms of a spending perspective. So today, still about 50% of all agricultural equipment purchased is purchased in the US, and we're only a few hundred miles away. So clearly, there is opportunity for growth either using our existing Canadian channels or by building out our business in the US. And so no pressing need to take our company global. So why did we do that? I think like any company, you know, I don't intend to be here 100 years, but I'd like to think that we're going to build a sustainable business model that can go for decades with healthy growth and reward our investors and keep our employees gainfully employed. And so we have to look at where the growth is going to come, not just the next 2 or 3 years, but where the growth is going to come in the next 10, 20 years. The agricultural story is complex, but I think this map is one of the better ways to tell that story. What this map shows is all the parts of the world where crops are grown, and the colors dictate the density of usage. So, you know, a light yellow would mean 20% of the land in that area is for agriculture. A dark red or brown would indicate 100% of the land in that area is for agriculture. You can see that it's mainly a northern hemisphere business. You can see that the U.S. Corn Belt and the Canadian Wheat Belt are you know, very significant agricultural concentration, and it's where we've been focused for over 100 years. Having said that, the single largest contiguous crop growing area in the world is in the Eurasian steppe, eastern Western Europe. It's an enormous area of crop growth, and in fact the best growing conditions in the world. And places like India as well, obviously, as they try to feed over 1 billion people, have very high density of cropland. So you can see, just from a market perspective, grain storage, grain handling, agricultural products have some very large markets outside of North America. But perhaps what's more compelling about this is the fact that the infrastructure does not exist in those markets. Again, we've been selling grain storage in Canada for, you know, many decades. We still sell 8,000 storage systems a year, and yet the market continues to buy, and yet in Canada, most farmers can store almost up to 100% of their crops and protect them. As you travel the world, what you see, and this is, you know, one of the more extreme examples, in places like India, crop storage doesn't exist. It exists in bag form. In the case of India, the Minister of Agriculture of India claims that they lose 22% of everything they grow. So they grow 400 million tons of crops a year. They lose 88 million tons to rot, contamination, animals. Put it in perspective, Canada only grows about 72 million. So Markets like this are enormous in terms of agriculture, and they're enormous in terms of potential. And if you went to Russia, you wouldn't see bag storage, but you'd see storage on the ground or under a metal roof. So they have crop losses of 10 or 15%. Whereas in Canada, the crop loss is 1% or less. So an enormous market opportunity. And as we look long term, we're a fairly big player in the space. There's a lot of growth in these markets, and there's virtually no infrastructure. So it's not that they're going to explode overnight, but over the long term, these will be enormous growth drivers for us. The third element, of course, is to try to stay at least at pace with or slightly ahead of your customer base. So in our case, everybody in our industry is looking at the same maps that I showed you. They're looking at the same issues that I'm showing you, the John Deeres of the world with their investments in Russia and India, et cetera. So people see that North America is a great market, but the CIS and India and others will be the bigger growth markets. In our case, customers like Viterra, which as many of you know was the old Saskatchewan wheat pool, very Canada-centric, ultimately migrates to Viterra, ends up buying a company in Australia called AB Grain, opens up offices in Russia, in Kiev. So our customers see the same things we do, and we need to be in a position globally to support them when they require it. So at the end of the day, we had to get out of our comfort zone. We're a very good provider in Canada. We value our customers enormously. But at the same time, to sustain our growth, we have to look outside of North America. So, of course, the old slogan, think globally, act locally, and I like to say panic internally, and it's because these are high-risk bets. As many of you know, when you start to take your business overseas, it's a different environment, it's a different culture, it's different business practice, different rule of law. And so you have to be very careful, and I think most people in this room, ourselves included, view ourselves as a small company. You can't afford to have large failures overseas. I could quote hundreds of examples. The failure rate of companies going global successfully is, the success rate's very low. And in many cases, they're organizations that we know well. One of the examples that's been studied the most over time is Walmart. Walmart is today the largest employer in the world. They have very successfully expanded in China, in South Africa, in Russia, in many, many markets. However, they failed. One of their biggest failures, one of the biggest corporate failures in history, is Walmart's expansion into Germany. They opened their first store in the late 80s. They built almost 100 stores over a decade. And in the mid-2000s, they ended up basically walking away completely from the market. They wrote off $1 billion, but in fact, if you add up all of the losses they incurred from 1988 to 2005, they lost more than $5 billion in that market. And I think, I'm not Walmart, you're not Walmart, but I think the lesson here is that it's easy to be lured into a market just because you have a good product and not necessarily take into account the risks. I think that's key. I think the second thing that's important is that Walmart can write off $1 billion. I can't, you can't, and I think you just have to be careful how you grow and how you mitigate the risks in the markets that you're growing in. So where are we now? We've been selling internationally for 6 or 7 years. I would say intensively, we've been trying to grow our international business for probably 3 years. And we're meeting with, I think, a fair degree of success. So on this map, colored in gold, are all the countries where we have sold successfully and installed projects. So we're on 5 continents. We're a little over 30 countries. And I think as Ron mentioned, unfortunately for us, most of the geographies we need to penetrate are Mongolia, Kazakhstan, India. They tend to be difficult markets to set up shop in. From a project perspective, I won't spend a lot on it. I'll just show you a couple of samples of some of our projects. This is a project we completed in North Africa. This is a project that's now complete in the Middle East. And again, some of these markets aren't what you would normally think of as crop-growing regions, but they obviously have to process into food. So a lot of these are things like flour mills. A project we completed recently in the Ukraine for grain storage, and a project we've completed quite recently in China. Thank you very much. I had almost no voice 2 days ago, so so far so good. So, we've actually, in a fairly short time, and for a fairly small company, we've actually expanded quite rapidly into some pretty complex geographies. And so what I'd like to spend the next roughly 10 minutes on is really what I call our lessons learned. I think some of these are very obvious, but I think it's also easy to lose sight of them. And I would also preface the remarks by saying that, I have had the pleasure of working in some different climates, in Japan and the Czech Republic, and it was right the year after the Velvet Revolution, after communism fell. Mexico, and I can say that every circumstance was different. There's no, there's no silver bullet. But we feel that these 5 sort of statements or principles help guide us in our global expansion. First one, study the market. And what I don't mean by this is, how big's the market, who's the customer, how much do they buy. What I really mean, because that's obvious, and I'm sure we all do that, what I really mean is understand the risk and the structural issues. You probably can't see that chart, but I'm going to quote 2 examples. One is Ukraine. Ukraine is arguably the best growing conditions in the world for crops, so arguably one of the best markets in the world. However, what shows in that chart is a study done by the World Bank in terms of country risk. So whether it's rule of law or corruption or political stability, it's a very difficult place to do business. I mean, even ownership of land is unclear. At times the government has decided they will export, they won't import, and those things change on a dime. So we do business there today. I can tell you lots about it when time permits, but the truth is we do business today, but we do it very differently than we would approach the Canadian market or even the Western European market. Similar to India, structurally, India should be a huge market for us. However, the average farm is 100 times smaller than Canada. And so in Canada, the farmer has the money to buy our product. In India, no farmer has the money to buy our product. So again, we have to take a very different approach. We want to establish our brand. We want to have presence. We want people to see our silos. We're fortunate that our name is plastered across them. So we want our footprint there, but we can't go to the farmer to buy it. And we have to take other paths through agribusiness, through distribution, through engineering companies to get our product out there. And I won't go into it, but there's a lot of data out there for those of you that are going into regions that are difficult. There's a lot of data from the World Bank, from the UN, that deal around issues of corruption or political stability or tax or duty. And I think doing that research is time well spent. The second issue, and we fell into this trap as most do, is to focus. In other words, don't try and boil the ocean. We were selling very quickly in a lot of countries, Australia, China, etc. We had a sales staff of 2 who were flying from Winnipeg all over the world trying to do business development and service the customer. Our engineering departments were very quickly overloaded because the quoting process is very difficult. Quoting in Canada is easy, quoting in Algeria is very hard. And so I think it's important for companies of our size, smaller companies, to focus their resources. Look at your markets, figure out where the near-term growth is going to be. Unless you have unlimited people and dollars, focus on a few key areas and have successes there. In our case, we're focusing on the EMEA, on Europe, Middle East, North Africa primarily. We've just opened our first office overseas in Madrid. The third one, I think your speaker tomorrow might talk about this. I think one of the traps that a lot of companies get into, and a lot of the failures actually come because the cost side isn't actually figured out before you enter the market. Almost everybody will immediately figure out that freight and logistics and duties are going to decrease your margin. Depending on your product, some products are very transferable. In our case, our product required engineering modifications. It requires a lot of customization. It requires multiple quotes. So there's a lot of sales engineering expense that goes into our overseas business, much higher than our domestic business, and you need to figure that cost out. At the same time, you're going to end up using your balance sheet differently. You're going to, in many cases, you'll find, of course, that you need extra inventory because lead times are longer or your receivables are stretched. And I think it's all manageable, but I think you need to understand it because in most countries that you try to develop, in our case, it can often be 2 years or 3 years before you really start seeing repeat orders. And so understanding those costs up front is key. The fourth point, my picture is a little bit comical here, but that is our installation crew in Mongolia. However, my fourth point is that getting local presence or trusted local presence as quickly as possible. It's, whether it's subtle cultural differences, subtle business practice issues, whether it's purely language translation issues or time zone issues, response time, there's always going to be roadblocks if you don't have local presence, and preferably local presence that operated in that market for decades. Where we have been very successful in markets like France and Russia and Egypt, it's because we've had people on the ground who've worked in those environments for decades. My last point and fifth, and I think this is a lesson learned for us because I think we were slow. Many of you in this room will probably have a product that's 100% transferable, whether I buy it in Canada or I buy it in Ukraine, and it won't make any difference. But many of you will have a manufactured product or a product that requires customization. It could be as simple as metric to imperial. It could be as simple as code compliance. Our structures are erected to building code. Building code is different all over the world. So I think dealing with that up front, as opposed to trying to convince the customer that you have a better mousetrap, is critical. And in many cases, you can spend and waste a lot of time and a lot of effort trying to do business development and trying to get customers, whereas a simple adaptation of your product will solve the problem. And I think in our case, we've found that, and I think we're now much more aggressively looking at how we modify our product to meet the customer demand and not convince the customer that we have the perfect solution. I would close by saying that, as I said in the beginning, every experience is different. I mean, this is our experience. Hopefully a couple of these relate to your businesses as well, but every experience is different. For West Steel, over the 3-4 years of learning, these are kind of our guideposts, and they've, I think, helped us grow. We've grown quite dramatically, and at the same time, we've never had a bad project. I mean, we've had projects that have been complicated, but we've never lost money. We've never had assets trapped anywhere. We've never had any really serious issues to deal with. And we're operating now in some pretty complex geography. So I think it's working for us. It's certainly not for everybody, but I think we're very proud of what we've taken this Winnipeg company to on a worldwide basis, and we look forward to keep building our brand overseas and to make it to the point that it's as recognized as it is in Western Canada. And on that note, I would just like to thank you for your attention. The after-lunch speech is always tough. I think most people have stayed awake, so thank you. And I would like to wish you the best of luck with your subsequent meetings, and congratulations to Centralia for a fantastic event. Thank you very much.